So I want to show you something scary in this video. It's not something that worries me, but it's definitely one of the scariest charts I've seen at the moment in this market, and it's to do with the S&P 500. Now, very quickly, for those of you who are not regular subscribers, not hitting up the like button and all that good stuff, that's totally okay. Let me brief you on this. The reason, in my opinion, that the S&P 500 is critical to Bitcoin's success in terms of rising as an investment is because Bitcoin is considered like a tech asset. The S&P 500 collects, technology companies, and it is a great marker. Generally, if the S&P 500 is healthy, so is Bitcoin. Generally, if the S&P 500 is weak, so is Bitcoin. And we have decoupled from that lately. Bitcoin has performed better than the S&P 500, not by a little bit, but by a lot, which is great news. But we are still bound by macroeconomic factors like major indices, such as the S&P 500, in my opinion. And for a while, pretty much since we set the high, we've been trending down up until when we managed to break this line right here. This line right here was a game changer for the S&P 500, and it's one of the key things I was talking to you about on this YouTube channel for a very long time. Because as resistance, it was phenomenal, and I was expecting that to flip into support, and that's what we've had now, which is absolutely beautiful. We're on the weekly time frame here, but if we zoom in onto the daily time frame, very, very clear. And if you draw the line differently, you can see that we actually fell a little bit below it over here, but we have had, in this case now, 2 tests as well. So I like the way this line looks for the market, but it does still mean that we are in recovery mode. This is the problem. This is where this could get really bad and result in Bitcoin dropping below $10,000 and horrific price targets like that. I'll get to that in just a minute. If you're excited for it, do me a favor and smash up the likes. If we are in recovery mode, that means that we can break out of downtrends like this. We can backtest them, which, as far as recovery mode goes, this is the best thing the S&P 500 could have done, in my opinion. There are really only 2 things you can do if you want to bottom out in a market. Number 1, you hit the low and you consolidate. You don't do anything for a very, very long time, and then you can start looking at going up. Number 2, you have an explosive reaction off a support level. You break a resistance level, you come back down to test that resistance level as support, you capture support, and you rally on to keep setting higher lows and higher highs. That's what we want. That's recovery mode for the S&P 500. Now, where this becomes a problem is that this has happened quite a few times previously. This is a chart that's been going around a little bit, and this is not the first time we've seen something similar, not only in terms of the shape, basically, of the chart, but also in terms of these breakouts, where we have these lines offering resistance across the long-term chart for the S&P 500. We break above it, we come back down for a bullish retest, but it does not materialize, and we fall down to set new lows. And in this case, from the trend line to the absolute low, this was a very, very bad time for holders of this index. They lost a further 42%. From the point of the back test to the low, they lost 46%. From the high to the low, this is, of course, the 2008 crisis, they lost 57%. So a very, very big drop here. And the drop only really got bad after we got the back test. After we got the back test, we came back down a second time. This was the first time coming to the resistance level. We came back down a second time, and this is what failed us. Now, again, if we look at the parallel with where we are right now, we're on the weekly chart. We've only had 1 back test of this line since we broke out above it, unless you count the fluff over here, but I wouldn't because we're on the weekly time frame, which means that if we do something a little bit like this and then come back down, it's lights out. We're done. Game over. And good luck, And I agree. That's what I would expect if the S&P 500 does that. If the S&P 500 at any point, basically, because it's been 2 weeks thereabouts since we got it has actually been 2 weeks since we got this bounce, because we're about to open the new weekly candle tomorrow. If we get anything, that means we come back down to the support area now, I'm done. All right, I've got my bullish hat on. I've had my bullish hat on since around here, and definitely since around here. I've been very bullish on the S&P 500. I've been very bullish on Bitcoin since we were down at $17,000. I've been very bullish on gold for basically forever. All of that goes. All of that goes if we revisit these support areas, because we should not be doing that. I'll give it some leeway if we revisit the support area quickly after bouncing off it, right? Kind of like we did already. See, on the on the daily time frame here, if I redraw my line a little bit, you can see we tested it here. A couple days later or whatever, we come back down for a deeper test and then we break out. That's okay with me. I don't mind. But we've now had some time between our previous test and potentially getting a next one, and that's where this gets really bad and the risk of the support level collapsing massively shoots up. This would be a real problem for the S&P 500 in my opinion, and that's what happened on this occasion here. But there are more occasions where this has happened. Take a look at this one right here, and we've got the exact same pattern forming, where we've got a really nice, respected long-term area of resistance. Bear in mind, we're on the weekly chart here. Every single individual candle here represents a week of trading. That's a lot of trading. So this is a long-term resistance line. We have our resistance, resistance, a little bit of resistance or consolidation around here. We get the breakout, backtest, phenomenal. Great backtest so far. From low to high, we're up by 8-9%. Good. Not crazy, not amazing, but good. Yet the market falls back down anyway. That slow bleed, and this is, again, I can't stress enough, this is the weekly time frame. To live through this would have been horrible. We're talking about from this high down to the low, the S&P 500 falling for 130 days straight. More than 4 months of pretty much continuous, relentless sell-offs. This is exhausting. This is bad price action. And this also, after only mustering up a 25% rally that takes half a year. You know, and before that, we were trending down anyway for a very long time. This was bad to live through, right? So that ended up happening. And there are similar instances. If you go further back, you can still find more. I don't want to focus your attention on them too much, but we're looking at similar things, right? We're looking at, in this case, we found support off our previous line of resistance. Didn't really do much, but we found support here, and it's actually called the market bottom. So this was actually quite interesting with that comparison. And while we're here, this is actually what I want to draw your attention over to, because it appears that the S&P 500 could be following the 74 crash quite closely. So let me show you how this might be looking. If we drag this over back to our current day's price action and take a look at what's going on right here, we're going to have to expand this, obviously, because the price range is just so different. You know, we are potentially, and this is what a lot of people are talking about, is we're either here, forget everything that happens before this vertical line. We are either doing this and then getting ready to drop down, or we are on this, and they're both basically the same thing. So this is where, as I said earlier in the video, there are a lot of similarities between the S&P 500 now and the S&P 500 of previous crashes. In fact, if you look at its crashes, and you would have seen a good few of them in this video so far, smash up the likes if you're finding this useful so far, you'll have noticed that they're all basically the same. They all follow broadly, I would go as far as saying, similar characteristics. And so yes, of course, this is pretty bad. This is pretty bad, but here's the thing that kind of balances this out and why I'm not too worried about this. And before I get to it, I want to highlight to you guys that if you find this kind of stuff interesting like me, I've got so many trades planned on indices like the S&P 500, on commodities like oil and gold. I want you to take a look at Prime XBT. These guys are offering you a chance to trade all of these traditional finance markets using Bitcoin with a $7,000 deposit bonus, which means that depending on what you put in, 7% of that is going to come back to you as a bonus for just basically free cash. You can throw it in the market, you can trade with it, you can do whatever you like with it, and if you make money, it is yours to keep. Prime XBT is the only crypto exchange that I know of that allows you to trade all of these other traditional finance markets. If you want to stick to crypto, Bybit's the place, up to $30,000 in deposit bonuses. Same deal as Prime XBT, depending on what you deposit. With Bybit, you have to trade a little bit as well. You're going to be getting up to 30K in bonuses. Again, just free money that you can throw into the market. Check them both out with the links in the description down below. But if we go ahead and take a look at the S&P 500 and its bull cases now, you know, what I think is definitely quite different is that we have a very strong sentiment where bears are so clearly, and I'm going to go as far as saying it, clearly infuriated that the market is going up right now, right? Like, this has been very difficult for bears to internalize, that the market can possibly find support at an old area of resistance level. At an old area of resistance, that the market dare find support. It's just a horrific thought to them. They are pissed off, guys. Bears have been pissed off since Bitcoin was crashing, since Bitcoin rose up to 25K last time, since it crashed down to 20K. Bears have been pissed off. And if you've been watching my YouTube channel, I have been calling it out aggressively, because when the majority of people are on that side, right, and they're really, really annoyed that the market is going up, they're not generally going to get what they want, right? And I'm not here today, I'm not here to laugh at bad traders and so on, but just from the perspective of someone that is an observer in these markets, I don't think it's super likely that when everybody is still so bearish, that when bullish breakouts are happening, at the end of the day, whatever you think, we got a bullish breakout. We've set higher lows and higher highs, and we've back tested, all the basics of technical analysis are saying this is a big bloody deal, right? This is a big bloody deal. And so with all of that in mind, and the fact that bears are infuriated, and there's so many of them, does that just mean we completely disregard an entire bullish breakout, and instead the market rides down because everyone's fearful? Well, if we are actually transitioning into something horrible like a big depression, then yes, that would be the case. I don't think that's happening. This is where your judgment comes in. I'm not going to be here sitting down here on the floor talking to you about my Bitcoin analysis, my S&P 500 analysis, and on top of that, my opinions on a big depression happening, in the global economy. I'm just not qualified enough to talk about any of these subjects, let alone the three of them together. But I want you to make your own decisions based off the data I'm showing you. To me, it doesn't look like your typical circumstance where we keep doing horrible things. And bottom line, I guess my blessing as a trader is that it doesn't matter either. When the market is going down, I'm making money going short. When the market is going up, I'm making money going long. And these things are what inform me of the very long-term view of the market. Okay, and with inflation data that I do want to take a look at, we were doing very well. Now this might reverse a little bit when we see this update, in April. On the 1st of April, we might see a little bit of a difference here. And that's not far away. So make sure you are subscribed to this YouTube channel if you want to see that analysis. That's going to be really good. That's not far away. And you might have seen the Fed balance sheet has taken a bit of a pump. I don't know if there's like a recent picture. I'm clearly not in the right. There it is. This is a recent picture. I believe, maybe not, but the current chart looks exactly like this, right? Where you want to see it dropping, but when they start printing money again, those drops no longer continue. Here we go. We're going to find it here. This is it. This is what we're looking at today. March 2023. So what this means, by the way, this is a really interesting chart, is that all of the quantitative tightening, which means all of the interest rate hikes that we've been seeing over the last 2 years. Maybe I got this wrong, hang on. 2/3 of quantitative easing done in the last year. So, my bad. Over the last 9 months, 8 months, we have, you'd have to check this actually, I don't know where this is. Yeah, this looks like about 8 months. Within 2 weeks, we've erased 8 months of quantitative tightening. That's a really big deal, right? What I'm saying here is that everything the US government has been trying to do in order to tackle inflation and so on, has been erased because of all of this money being printed. And we're getting really advanced now. We're getting way beyond this YouTube channel. This is the stuff I research every fucking day. If you want me to talk about it more, just let me know in the comments. Drop a comment down below. But what this means is that the banking crisis, you can see how it's all coming together now. The banking crisis that's going on in the United States and Europe right now, is going to require some, intervention to fix, right? Because there is actually real problems. It's very obvious. There are actually real problems, I should say. It's very obvious, and this is where the government might want to step in and start printing money to fix the problem, which is what they're doing right now. There's also interesting counter arguments to this. I'm deep in the hole. I'm deep in the hole with this analysis. I've been finding it so interesting, which is that because inflation is still so high, even though money is being printed, which is obviously a bull case for the S&P 500, even though money is being printed, it's happening at a time where inflation is above 2%. I'm sorry, where inflation is above 4%. Usually the target is 2% for inflation, 4%, you know, we start looking at fixing it, so on. We're at 6% right now. So, you know, that might be a reason that, things aren't really going to work out, and there's a high risk of people that owe money, credit, not paying back. So it's a whole mess. It is like truly like experts clashing with experts right now. But my job here has been to give you all the data that I'm seeing, all the data that I'm intrigued by, tell you what I'm seeing from it, and encourage you to make your own very informed decision after you go and do some more research. It's pretty serious stuff. A lot of people, they have this opinion that you can just kind of log on to YouTube, watch a couple, affiliate marketers, and then be done with your day of learning. And no, if you wanna really know what's going on, you've got to read. You've got to be looking at what's going on in the market. You've got to be looking at macroeconomics. You have to study it, right? And it kind of sucks to say, because you get into trading, you're like, all right, this is my lottery ticket. I'm going to press a few buttons and make a bunch of money. But that's obviously not what works. If you give it the time that it needs, you will do well. I want to show you guys what's going on inside the VIP group, so check it out by following these steps on screen. You're going to get 50% off right now, and this is the group where you can watch me making all of my trades in real time. I tell you everything I'm doing, I tell you why I'm doing it, I give you advance notice, right? Like if I'm starting to consider a trade on a Thursday, but I'm not sure if I'm going to enter it until the weekly close, I'll tell you on Thursday, and then I'll update you on Friday, Saturday, Sunday, whenever it's necessary. And if I decide to enter it on Monday, I'll tell you that too. I'll tell you where I'm entering, how I'm taking profits, and all that good stuff. That's how I was able to keep VIPs fully up to date on this beautiful position I've had, which this screenshot shows I'm at a $180,000 profit. Unfortunately not. It's more like 170 right now. Totally fine with me. And I have been securing profits all the way up, stop loss raise, and all that good stuff. I've been explaining it all the theory behind my decisions as well. Not only that, but also the actual courses I sell on trading and analysis, where you get all the theory from that. You see me implementing it with the practical and VIP. Really strong, very, very hot combo. Definitely take advantage of that if you're interested in it. And if all this analysis on the S&P 500 has got you interested, you've got free cash waiting for you on Prime XBT to trade it. So go ahead and check that out if that's something that you think you'd be interested in. This is a phenomenal exchange. Like I said, I've been a big fan of these guys for years and have been working with them for quite a while as well. Bybit, obviously you know the deal. This is my main platform for crypto trading. You're going to get up to 30K with them. So there you go. I hope you've enjoyed this one. It's been a very different one. Let me know your thoughts in the comments down below. Double check that you are subscribed if you're watching this content regularly, and that you've got the bell icon checked. I want to make one very special note. A lot of you have the bell icon checked, but you don't actually have notifications switched on in the settings of your phone. I know that sounds like a little bit of work. If you can't be bothered, all good, whatever. I probably wouldn't be bothered either. But if you've been expecting notifications on YouTube from myself and other creators and you haven't got them yet, it's because they're blocked in your settings. So go ahead and check that out in your phone settings if that's something that you're curious about. With that, I'll see you all in the next one. Cheers.